This is Dan Miller. Thank you for joining me on this episode of Better Financial Living. Today, we're going to finish our series on Social Security benefits. And today, we're going to talk about Social Security benefits while still working and the taxation of benefits. Well, if you're still working and you claim benefits before your full retirement age, you will be subject to the Social Security earnings test. And right now in 2020, that is that for every $2 you earn over $18,240, $1 in benefits will be withheld. Now that value does go to $18,960 in 2021. Now it's important to point out that you don't lose that. It is just withheld until you reach your full retirement age. I also encourage you, don't let the earnings test prevent you from working, because you don't lose the benefit permanently. It will be refigured into your benefit once you reach full retirement age. And I will point out that the earnings test does apply to all benefits received before full retirement age, and that could include retirement, spousal benefits, and even survivorship benefits. Taxation. Well, your benefits may be subject to tax, and it will depend on how much other income you have when you're receiving your benefits. Now, how much your Social Security benefit will be taxed is going to be based on what's known as provisional income. Now, the formula for provisional income is your adjusted gross income plus 1/2 of your Social Security benefit, and then plus your tax-exempt interest. Now, for example, for a married filing jointly couple, if you have provisional income under $32,000, none of your Social Security will be included in your taxable income. Now, if your income is between $32,000 and $44,000, up to 50% of your Social Security could be included in your taxable income. If your provisional income is over $44,000, up to 85% could be counted towards taxable income. Now, what are some ways that you could potentially minimize your taxes on Social Security? Well, of course, reduce that other taxable income, as I mentioned. You may want to anticipate your required minimum distributions. Maybe you want to make sure that you take some of that income earlier, so that when you do get to age 72 and you have to take required minimum distributions, that won't be such a large amount. Maybe you also want to consider Roth conversions at a younger age, after age 59 and a half, prior to age 72. Maybe that's a way that you can reduce some of that income, which would then cause less of your Social Security to be included. Also, you can also just delay claiming your Social Security benefit. This reduces the number of years that are subject to tax. Well, to wrap this up today, I do want to point out a couple of things that are updates for 2021. There is a 1.3% COLA going into 2021. And then also the maximum amount of payroll taxes, or payroll that is subject to Social Security tax does climb from $137,700 in 2020 to $142,800 in 2021. So again, that wraps up our series on Social Security. Next week, we're going to take a look at financial steps to take and things to consider before the end of the year. Thank you.